Hey guys, Tommy Bryson here, and welcome to Ask Tommy Bryson, where I take your questions and talk to you guys one-on-one. If you want to join me, just go ahead and sign up directly in the link down below, and that way we can talk one-on-one. And by the way, everything is free. Let's get started.
Hey, what's up, man?
Hey, Justin, how are you? It's Tommy Bryson. How can I help you?
So quick question. So for these help videos, are you uploading them on the Tommy Bryson channel or?
Yeah, so just so you know, these videos are recorded and potentially might be uploaded to the Ask Tommy Bryson channel, the new channel.
Oh, gotcha. I gotta check that channel up.
Yeah.
So, no, I was just gonna talk about your journey. I know I watched you for a while, and you mentioned that you graduated and you became an accountant, right?
Mm-hmm.
And then from there, I think you said you were doing like 60,000 from your business as an accountant, right? Something around there.
Something like that, yes. What I did was before I graduated as an accountant, I started going to small businesses and offering my services as an accountant, also helping, for example, with personal finance and their whole budgeting, and also helping them fund capital. So I was doing all that stuff. So by the time I graduated, I had that business actually starting out. But even before that, before I started growing and growing, I also have, for example, another job. So when I graduated, I had a job and I also had the business, and then I stopped the job when the business made me enough money. And at the highest point, it was making me around $8,000 a month at the highest point. So times 12, that's around $96,000 a year.
Got you.
Yeah.
Got you. And then so now you're full-time YouTube, right?
So right now I'm full-time YouTube. That's what I do. So right now I just have 3 channels, and this is basically what I do.
Do you get ever worried about relying on YouTube, or you think it's I think you're at a comfy spot with YouTube where even if it does do bad, you still have views coming in because you do a lot of evergreen content.
That's a great language. The answer is I'm always worried. I'm always good, but I'm never satisfied, right? I'm always moving forward. So YouTube is great. It's good for money, but not if all you want is money. YouTube will stop tomorrow. I don't own YouTube. Google owns YouTube. So I don't know what's going to happen tomorrow. So that's why 95% of all the money I made from YouTube just goes towards investing. Literally all the money I made from YouTube just goes towards investing.
Gotcha. Because I also have a YouTube channel, and my thing is more with stocks. Definitely, I'm just at almost 2K, right? Just trying to go, being consistent. So what was your journey when you first started YouTube? Obviously I know you had other channels in the past, but how long until you started seeing consistent growth in the main channel?
So have you started making any money yet from YouTube, or are you just gonna start?
Oh, so I'm monetized. Last month I made $200, and then off affiliate links, I made 1,000. But
That's awesome.
Not it's kind of not consistent.
Yeah.
So I really try not to count that at the moment. But I'm really just gonna grow the AdSense and grow the channel overall. But what point, what size of channel until you started seeing it grow consistently?
I think we were around there's always growth going on, you know what I'm saying, from the very beginning. So when I started the finance channel, we had around 2K subscribers. 1K subscribers were actually fake because I actually bought 1,000 subscribers back then, and then 1K was basically from 11 years of hard work of just trying different things out. And then when I started the finance channel, I was posting literally every single day. After around, I'll say month 6 to month 8, that's when I saw okay, this is making me some money. It was $30, $50 a day. But again, I was still making money from accounting business, and also, for example, my normal job. So I didn't really need YouTube for money, but I wanted to work it up until I made some money from it. That was the overall goal.
And you said it was at $30 a day?
Yeah, it was okay, so if you're asking me, Tommy, when do I know that YouTube is making me enough money to quit my job? Is that what you're asking me?
Oh, no, I would know when, but I was just saying, when did you see it, drastically, what helped you, go from, $30 a day to, maybe $100 a day?
Just posting content and helping people. The dollar number is great, right? Seeing money come in, but the more people you help and the more content you create, that's all that works, right? So if you go from helping 1 person to 10 people to 1,000 to 1,000,000, obviously you'll start to make more money.
Got you. True. And do you ever feel like you won't see like growth as like the bigger finance YouTubers just because of like being honest, like what you call it, how you're Dominican, and it's like kind of like seeing like I don't what I'm trying to like the area I'm trying to like go to.
Say what you want to say.
Yeah, well, like how like we're like, for example, a lot of people what I see like in the finance niche that are kind of like either Spanish or black, we always kind of say like, man, it kind of feels harder to grow because we also see like our white counterparts that kind of like are at the same level with us grow significantly faster, even though they're not like maybe making even better content. It's just sometimes we just feel like they just appeal to a more mass audience, and so that was something that, like, I spoke to Richard Fain in the past, and he agreed, but he said it's just something you had to deal with. So I was just wondering, do you ever feel like that has ever like stifled your growth?
I felt like that once, and it was when I hit 100K, and I never got a plaque. And they told me, oh, we just don't think your channel is a channel that we actually like give plaques out to, because it's optional. And right then when I felt like that, I was like, all right, stop this victim mentality and just keep working towards what you're going to work for. You don't need any validation from anyone. And everyone's like growth is different. I don't care what you are. There's a lot of people trying out, like whether you're white, you're black, you're Spanish, whatever you are. I don't really care. I think when I read the story about Can't Break Me by David Goggins, it just changed my entire perspective. Like, you have this guy that's a black guy growing up when people were actually like super racist back then, and still growing up to become David Goggins, like a massive legend. So I don't think about any of that stuff. Like, I don't really care about. I think, oh yeah, here's the idea, right? I used to be very like comparative, because I'm very like very competitive. Like, oh, it's be like, okay, so Graham has this many subs, I want to get there also. But then I started basically competing against myself. And the more you do that, the more you improve. So if I was making a video a day, how do I make 2 a day? If I was making 2, how do I make 4? And right now, me and Danny, my editor, he's from Vietnam also. We're making around like 6 to 10 videos a day. It's just like competing. Yeah, just competing against yourself. So I wouldn't 5 to 10. Yeah, 5 to 10. But I don't compete with anybody else. Like, I just focus on myself, and I'm just like stealing souls. That's what David Goggins says. So you just put in the work, whatever you want to do, and don't focus on anything else. Like, whether it's like having like a handicap. If you focus on that, like, oh, you're black or you're this, like, just don't focus on that. It doesn't matter. And I have people that follow me that I don't even know like what they are. Just like, if I can help anyone, I just help people. I really don't care. I'm happy I grew up like in 2021 and not like the 1800s. It'll be different back then, but today is a lot more. It's a lot more different. You know what I mean? So anyone can do whatever they want to do.
Yeah, I mean, I see it in my subscribers. Like, I'm Dominican, but I don't like kind of like put it out there, right? But I do see that most of my subscribers tend to be like either Hispanic. So I was just like wondering, like, is that like just because like people tend to like watch people who they look similar to. So that's what I was just.
It's also psychology, right? Like, it's all like I always tried, for example, when I was in high school, not to hang out with a certain type of person, like what I'm comfortable with. I can easily come to America, hang out only with Spanish people, and before you know it, I don't even know how to speak English, right? You see that a lot with a lot of people. Yeah. I always put myself on uncomfortable places. For example, I would talk to all the people, be friends with everyone, and that way I get a healthy mix. But obviously, people are going to basically lean forward to whatever they're very comfortable with. So if you are a certain nationality, most likely you're going to attract those people. But in reality, these days, people, I don't really see any of that stuff, man. It's probably because I don't focus on it. But these days, it's all about, like, if you make good content, whether you buy good content from a Chinese guy or from made in US or made in Bangladesh, all you care about is the product, right? Is it cheap? Is it good? Does it give you value? That's all you care about.
Got you. Awesome,
and don't be afraid to like to say like where you're from or any of that stuff, because it gives when I say I'm Dominican, it's kind of to say like, oh, look, I'm Dominican. I was there until I was 7 years old. We moved around a lot, but it gives people the idea that, hey, it doesn't matter who you are, where you come from, you can achieve whatever you want. There, in my opinion, there's nothing special about me at all. Like, all I am is just the work of compound interest. When it comes to knowledge, when it comes to YouTube, when it comes to success, it's just putting in work. Doesn't matter who you are, where you come from, none of that stuff.
Got you. Awesome. So, when do you plan on like moving to Florida, man?
Well, the plans has changed, man. Initially I was going to Miami, and then it was too expensive, obviously. And then I said Fort Myers, but then Fort Myers was kind of like a little bit too weird for me. Like, okay, it was like a little bit like a lot of older folks over there, so not really my vibe. And then I said
Mhm.
Tampa. My girlfriend actually, my fiance went down there to check it out. She actually loved it a lot. But then I spoke to my accountant, and we figured out that basically Puerto Rico is going to be the best choice because the taxes are only 4%, four
Mhm.
percent. So that's gonna be the vibe for we're gonna go in April to check it out, see how it is. If we like it,
Mhm.
it's gonna be Puerto Rico. If we don't like it, it's gonna be Tampa. So you have first choice Puerto Rico, second choice is Tampa.
I wonder how like that actually works with the taxes because I know like because I'm in Florida now. I'm moved from New York to Florida, and we
Mm-hmm.
don't have like a state income tax.
Mm-hmm.
So like with Puerto Rico, like I know it's not technically a state. Do they like not have state income tax as well, or?
They don't have state income taxes. Well, they do have like their own state income taxes, but the overall thing is basically, when you have an LLC, you probably have one
Yeah,
with your YouTube
yeah,
thing.
yeah.
And you know
Mhm.
how like your overall income gets taxed. So if you make 50K, that gets taxed federally and also the state level, and also like the whole like unemployment tax, all that stuff.
Mhm.
Well, when you go to Puerto Rico, they only tax you 4% on the income you actually made. That's it. And the income you pay yourself as a salary, you get taxed federally, yes, and all that stuff. But in reality, that's it. So you get to save a bunch of money from taxes. That's why you saw, for example, Ty Lopez. I think Logan Paul is also going, and Jason Capital. A few people go to Puerto Rico because basically, if you make $1 million and you pay for yourself, if you pay yourself, for example, like 400K on that 600K, you only pay, for example, 4%, and you can avoid everything else.
Gotcha. And then I think they have like something. I gotta look it up. I might make a video on it. Who knows? But it's like
Mm-hmm.
there's something capital gains tax. I think there's like no capital gains tax in
I,
Puerto
I
Rico.
think I think that's no, it falls under different acts, right? And there's different like things you have to do. So I think that's called Act 22 or Act 20. And the idea is
Mhm.
that if you don't want to get capital gains tax, then in reality you have to buy a home over there. And like the filing fee is like $5,000, and it's like a few things out there. But if you make a lot of money and you have a lot of money coming in capital gains, then you're good to go. Like it'll save you a lot of money. But if you're just like getting started, most likely it's not gonna be lucrative enough to actually go there for that. We actually are gonna go over there under the Export Act. I think that's Act 20 or Act 22. And since I'm exporting
Yeah.
service in Puerto Rico over to the US through the whole like YouTube thing, that's considered,
Mhm.
and that's how I can actually qualify for it.
Gotcha. You don't ever plan on like moving back to the Dominican Republic for like how cheap it is?
It's not cheap, man, because cheap is relative, right? Dominican Republic, like the food is crazy expensive. The only thing positive about that place that I go every single year for is like my grandma and my family. My whole family's down there. As far as,
Mhm.
for example, like I'm living there, the taxes are very expensive. Like it's gonna be like
Mm.
25% in taxes. So that's the only reason I won't go. But once I become financially free and I don't have to worry about those things anymore, maybe like in 3 to 5 years, 7 years, then if I want to live there, I can. I plan on having a property there because my family is there, and like I can go over there, stay like 5 months or so on. But to live there, that's not what I want to do. It's a cool place, but it's like the town where we come from. It's like there's barely any internet, barely any electricity sometimes, and like
Mhm.
there's not a lot of movement going on, not a lot of progress.
Got you. So, what's your thoughts? Like, when you said that you put all your money into investments. Is it like all stocks, or is it like real estate? Because I just got like my first property this year, but I kind of feel like I still always choose stocks over real estate. So I just
How
wanted
old
to
how
see
old
what
are
your.
you?
Oh, I'm 20. I just turned 25.
You're 25 and you live in Florida. You just got your first property.
Yeah, I just got like a condo downtown Orlando.
How much did it cost?
So it was like 154,000, and I put like 5% down, so it was really just like 7,000. Seller covered the closing costs. And the goal is just to be here for 1 year, and then next year like just rent it out and try to get like a next property, and just continue like just doing that cycle, and then eventually also like start refinancing and cashing out, and just repeating.
What do you do for work?
So I actually work at the bank, and then I also like swing trade on my days off.
Mm-hmm. I actually wanted to be a teller once. I remember when I was in college, I wanted to be a teller so bad. Thank God it didn't work out for me. Yeah, because those jobs you have to be in there 24/7. But as far as like where I put my money right now, I would say like 90, well, not really 95, most of my money is going towards like investing. Into investing, I mean, for example, investing into ETFs and also index funds. That's basically what I invest into. I don't pick any stocks right now or anything like that. As far as like real estate, when I get into real estate, I wanted to follow that formula you're following so bad. It's called like the Burr formula, where you buy, you rehab, you do all this stuff, you refinance, and you repeat. But then the problem with that is basically, as you asked me before, right? YouTube money can stop at any moment, right? So when you're following this formula, there's one thing there's a problem here, right? You have maintenance and you have vacancies, right? So if you have any vacancies going on, because basically what you're doing is, all right, you buy a property 154, right? Now you rent this out, right? So now basically somebody else is paying it. But however, if you have like 10 properties or 5 properties and now you have a few vacancies and you don't have a job anymore, well, how do you cover that? So there's always that issue. And also on top of that, you have like a massive amount of debt, because basically you're putting down 3.5% or maybe 5% down here. But that's not how I would do it. The way I would do it is basically, my financial plan is usually, I want to take care of myself first. So that means getting financial freedom first, meaning I have enough money in the stock market to pay me passive income. I own my house like cash free, like basically like no mortgage, no nothing on it. It's just like my house for like my family. Once it's taken care of, okay. If I want to buy real estate, I'll put down 20% down. I'll rent it out. I'll use the proceeds from the renter to go ahead and pay the mortgage. And on top of that, I'll put extra money towards the mortgage to pay it off 100%. And then I'll move to the next property. But that way, you basically erase any risks of having any defaults whatsoever or worrying about too much about vacancies, because that way you just own everything. That's how I plan to do it. It's a lot slower. Slower, but less risk.
Definitely, yeah. You know, I'm all about, obviously trying to mitigate the risk as well. But I mean, I do feel like for real estate, I kind of feel like leverage is like, the tool that you want to use. But I definitely understand that, like, then when you have the vacancies, that definitely could affect.
Leverage is a two-sided sword, and it's not really like it's like a how do I say this? It's like a shortcut. It's a shortcut, right?
Oh,
it's a shortcut to buy like a lot of properties. And you have for example, the stock market, right? You have for example, you want to do margins, do margins. You want to do options, do options. You want to do whatever you want to do, just do whatever you want to do. You make a lot of money, right? But the person that's most successful when it comes to investing tells you don't borrow money. Charlie Munger, which is someone that basically got into real estate, would tell you, hey, be careful with too much leverage. It's very dangerous. So when you build this house of cards where you have all this massive debt and it relies on everything going perfect in your life, that's not what I want to do. I want to build a life where basically if anything goes wrong, it doesn't matter financially. I'll be okay.
Got you. Cool. Yeah, no, that's a cool like investing plan. Awesome. So what's the new channel kind of like?
The Ask Me Bryson channel?
Yeah.
It's just to talk to you guys directly. That's all it is. So, because YouTube is great, posting videos is great, and reacting to videos are great, but talking to you guys directly is just different. Like it's just like seeing a real connection between two individuals and just like talking about like questions they have and what's on my mind, all that stuff. That's why I'm doing it. Just to talk to you guys directly.
So you're still 24, right?
I'm still 24. I just got here.
Oh, got you. Yeah. So, and then, so right now you're still living with your mom?
Yeah. So right now I still live here. Well, she hasn't been here like in over 5 months because she's been in DR because she's just staying over there. But I still live here. In June or so, I'll be leaving to save money on taxes. But if I were staying in New York, I would still be in my mom's house. I'll be fine with that. But because I am getting married pretty soon, and because of it, I think when it comes to staying at home with your parents, you have to leave when like in a way like when it makes sense financially. I remember I spoke to my counselor back in high school and he told me, Tommy, don't be in a rush to leave home. That's the only thing I regret doing. I left so early to the point where I didn't have any money to actually like save or invest or do anything like that. Staying here and paying, for example, $200 a month, by the way. That's all I pay, $200. Yeah. Like a small amount of money. It allows me to, I have my own space. I help my mom with some money if she needs money. I'm close to my family. But it allows me to also just like invest a ton of money. And now that I'm 24 years old and I have a net worth of a decent amount of money, I can say, okay, I'm going to move, but I'm fine. I don't have any debt. Everything's fine. I didn't rush anything.
Yeah, I didn't move out till 24 either. I used to kind of feel like bad about it though. Like, oh man, I still live with my parents. I didn't like go to like college. Oh, I did go to college, but I didn't do the whole like dorm apartment life. And sometimes like I did like, oh man, am I missing out on the experiences and this and that? Like,
Mm-hmm.
So that's just like one thing. Sometimes I'm like, okay, I'm like ahead in life than a lot of my
Yeah.
peers.
Yeah.
But like sometimes I'm like, do you, like what did I miss? Do you ever feel like you missed out on anything, or you're just like, nah?
If I, I can't take back anything that happened to me, like as far as college, because I met my fiance there, and I found out about like finance there and stuff like that. But if I
Hmm.
could do it all over again and still keep what I have today, like my fiance and like my knowledge, I would have never like gone to like a private school or anything like that. I would have gone right here, like for the 2 year school. I would have gotten a job, go to college, pay for the whole thing in cash. Do I feel bad that I stay with my mom? I think that's like a stigma, man. Like the whole thing, like especially like in movies, like it's 18 years old, move out, go to college, you stay there in a dorm. And then the thing
Yeah.
is, if you want to be an average person, you do exactly what the average person is doing, which is going to college, they dorm there, they graduate with like $36,000 in student loan debt, they get a car payment, they get a house, crazy mortgage. They do everything kind of like the perfect way, like in the movies. And before you know it, you're living like the Joneses, where basically you're one paycheck away from ruining your entire life. I don't care about what anybody's doing. I care more about like, hey, what works best for me and my family and what I want to achieve. So if you stop like living with your parents at 24, I'm guessing it was because that it made sense for you financially, right?
Yeah, yeah. Like
And
I
it's
didn't
all
go into any at all, like for college or anything, you know?
that's good. That's awesome. And I'm guessing it's also like a nationality thing. Hispanic parents are a lot more open to that, but
Yeah,
but other parents, some parents, I think it's just like American parents, like they're really like, oh, just move out, and it'll be okay to just move out like as soon as you leave, as soon as like you get a kid, like when they graduate like debt free and they have a job lined up, that's awesome, like you're just staying home for no reason. But if you're just like on a bunch of debt, you don't know what you're gonna do, that can be a problem.
yeah, no, definitely. I mean, like I just saw it because I had my ex. She was like American, right?
Mm-hmm.
And she at 18 went to the dorms, had that like whole party life, and then
Yeah.
she graduated maybe like $20,000 worth of debt, and then she became a nurse, making 60,000. So sometimes I'm like, like I mean, what like is it too bad? But I mean, I'm still ahead where it's like I'm making like the same, if not more,
Mm-hmm.
right? But also with no debt. So I'm like I guess it's like something that only time will see. Like was I
No,
able to like
time won't see, man. Because what you're talking about is experiences, right? That's all BS.
yeah, yeah.
Like whether you went into dorm or whatever, you still have like good quality friends that you have around you, which I'm pretty sure you do in some way. And in reality, you think about it like this, right? This girl makes 60K. She graduated with 20K in student loan debt. But remember, right? You have four like walls to a budget. You have, for example, the food, the transportation, the shelter, and also, for example, like what is it called? Transportation. You have food. There's one
Yeah.
more to it. But overall, like she has to cover all her expenses and also try to pay her student loan debt. A lot of people basically they build a life where they don't have enough money for that. But you right now, the only thing wrong with your like entire budget, in my opinion, would be like, hey, you bought a house and you put way too little in. But if you're gonna stay there and pay it off as possible, that's fine with me, right? But you didn't miss out on anything, man. Nothing whatsoever. You lived there. I did like the whole like college like dormant for like a month because we went over to Pittsburgh and it was
Hmm.
just it's cool. Like you live with other people. Oh my gosh, it's so cool. But is it worth 20,000? Is it worth 50,000? 100K in student loan debt? The answer is no, not at all.
Gotcha.
You didn't miss out on
Gotcha.
anything, bro. You're good.
Gotcha. Cool. Cool. All right, man. Well, look, I'm actually gonna head out because I'm actually gonna go back to edit like the rest of this video. Gotta try to be
Yeah.
consistent. Like,
Well, shout out your channel,
but yeah.
man. Shout out your channel.
Oh yeah, it's just my name, Justin Fernio. I just talk about like investing and also day trading. I also talk about like real estate here and there, but it's mostly just technical analysis and options.
How long have you been doing day trading for?
So I started like in 20. Well, okay, so in 2016 I like downloaded Robinhood and I was just like investing, and then
Mm-hmm.
like in like 2018 was when I got into like day trading. So like day trading and investing are two like separate things.
Yeah.
Where it's like investing. Day trading is like the active income, and then with day trading, that's how I'm able to add just more active income like along with my job at like in fraud investigations at the bank. So kind
Mm-hmm.
of that's why like I have a decent salary. And then I'm not counting like the investing because that's just like something that like I'm not gonna touch till like for a long time.
Yeah. Yeah. And
So,
you've been doing it for 3 years almost day trading.
yeah, pretty much, yeah.
Do you know like your profit and loss so far? Like how much money have you made? Like on years, like when have you lost money? When have you made money?
Yeah, so 2018 was like the first year where I just started like day trading, right? And the first year was like 4,000. Then 2019 was like 15,000. 2020 was 25,000. But I mean, 2000 like sometimes I like I'm not sure if like last year was just because
Yeah. Everything that went on.
well, you know what I mean?
Yeah.
So I'm not sure. We'll see how like 20. I just that's why I still have the job though, because like I don't want to like go full-time day trading just yet.
And how
So
many
that's why
hours like of work would you
yeah.
say like you work on day trading every single day to earn that money?
Oh yeah. So I have like a weird bank schedule where it's like I go in at like 12 and I leave at 9, and I do this just because so like every day in the morning I have like 2 hours to trade. Most of the time like the trades will be done in like maybe 10 minutes, because I'm only looking for like a good opportunity to like get in and out, like a scalp trade, and that's it. And then like some days I don't even hit, like if I don't see anything that I'm willing to take like a trade on, I'll just not take a trade and just go to work. So that's why like I'm balancing, investing, trading, going to work, and then also now YouTube.
And on a daily basis, like how often do you lose money? And how much do you usually lose?
Yeah, so I try to keep it at like 1%. Now, like I like originally the goal was like, okay, if you could do $200 a day, right? That's considered like six figures, right? But then I stopped like having that mindset, just because like you can't like, it's not every day you're gonna like win, and like I say like $200 a day like for the whole month average. That's like what the goal is for this year. But I keep my losses at 1%. I mean, there's some weeks where it's like I go the whole week green, and then there's some weeks where it's like I'll have like literally every single day red. But it's like my goal is just to like for the month still make a profit, and just what we call it, reduce the risk at like 1%. So like I don't use stop losses. I use like mental stop losses. But I can't really say like each day is like how much, because it could be like a whole like few weeks all green, and then it's just one bad day could ruin it. But what I want to do eventually, which would be cool, would be like create like some type of software that like basically like tracks everyone's trading stuff, so they could just like analyze it better, because that'd be actually a cool thing to look at.
Like you track trading like activities, so you can like basically get a trend out of it.
Yeah, well, no, just like track like your P&L, like how like right now you just like kind of put it in an Excel sheet, or you kind of think about it, or write it down. Like it'd be cool to like have like some type of software, like in the future, for someone to like develop, where like it shows you all the days you went red, all the days you went green, show you what ticker symbols you did well in, and kind of just like also say what time of the day, like just provide, how like YouTube has analytics, like just provide like analytics, like to review like what's going on with your trading strategy, so that'd be kind of cool.
And let me ask you a question, Justin. Is that like your long-term strategy, like day trading, or do you want to basically like get into like more passive income where it's not that much risk involved?
I mean, I try to just funnel all my day trading profits into investing.
Into long-term investing?
Long-term investing, yeah. So, day trading is just for like active income, just because I like doing it, and just keeping up with the market. But like the goal is to obviously just keep funneling it into like my long-term investment.
What would you say right now is like your ratio? Like how much do you put into like normal investing, like long-term, and then into day trading?
So for day trading, are you saying like how much I use?
Yeah, I mean for the rule I have is like 90-10. We put 90% of your money into like real investments, and then 10% into like having fun and more speculation. Like what would you say is like your ratio? Like as far as that, like do you do 50-50?
I mean, I would say it's like 90-10. Just like, I mean, like let me try to explain it. So like I'll trade with 30,000, and at the end of the month, whatever I made, I'll put that all straight into like the investing account. So it's like, let's say I made 30,000. I mean, I'm trading with 30,000. Let's say it's a good month. I made like, let's say just like 5,000 or something like that. That 5,000, I immediately just put it back into like investing long term, and then I start fresh for the 30,000. Now, if I have a month where like I lose, which obviously that's gonna happen, I won't I won't bring it back. I'll just leave it there. So if it's like I'm down to like 26,000. Then for the month, I'll just trade for 26, and then try to get it over 30. Whatever is over 30, you just put it away. So like, let's say I go down to 26. Next month, I bring it up to 31. I'm only putting 1,000 away.
So when you start, so when you started back in 2018 and you made 4K, how much were you trading with?
Oh, back then I used to just trade with like maybe like 15,000. The only reason
15,000.
I trade with 30,000 is just because of like the pattern day trading rule, where it's like you need $25,000. You need to be above that threshold to have unlimited day trades, and
Mm-hmm.
so that's the reason I just use that number 30,000.
And do you have to replenish it like often, or do you just like always like you've been leaving it like that for like a long time now, like just on 30K? Like for example,
Yeah,
like do you ever run out of money like below 25,000 to where you have to say like, hey, I have to put more money in so it can meet like the threshold?
no, no, never really, no, because that's the whole reason why like I cut my losses, because that's something that like it's kind of like it's weird psychology where in like trading like you hate losing, but like you have to, like, if you're wrong, you're just wrong, like get out,
Mm-hmm.
because then otherwise you become like kind of like what they call like a bag holder, and you just don't want to you don't want to do that, just like it's like you got to trade with no emotion basically, and
Yeah.
if you're red, just get out, and you just gotta like reflect on it, look at like what could have possibly made you make that trade, was it like impulse,
Yeah.
and then get back in. But I never have to like put money from like my what you call it, investing account, or just from my
Mm-hmm.
like personal back into like the trading account. Trading
Mm-hmm.
account is just like it'll go down, but I'll bring it back up. And if I don't bring it back up, then I just like continue trading, but it hasn't hit below 25,000 because I try to just, like I said, mitigate the risk as much as I can.
So if you have like 30K for day trading, like how much would you say you have, for example, in your normal investment account?
So the normal investing account is around like right now like 60,000.
60. That's awesome. So
Yeah.
you're like 50-50 right now, bro. That's what that means.
Oh, you think it's 50-50 then?
Well, not 50-50. It's more like you have 60K in one account and then 30 in one account. So it's
Yeah, I
not
mean,
it's not
like,
yeah.
yeah. I mean, the 30 is just so I could use it. Like, I guess I see what you're saying. I see what you're saying.
Yeah.
Yeah, you're right.
Because that's like you're deploying capital, so that money is there for spec. By the way, when you're picking like one of these, like when you're picking like on these trades, like what would you say is like your mentality, like going into a trade, like what are you looking for, and how are you picking them?
Yeah, so I use an indicator on TD Ameritrade. It's called linear regression channels, and it's like a weird indicator because like I've used so many other like indicators like the SMA, the VWAP indicators, but they look at like volume and the average price. And
Mm-hmm.
what's funny about like the linear regression channel is just that it's not like calculating anything really. It's just going like, yeah, as far as like the volume or anything. It's just literally finding the price. Like let's say Tesla's like went from like this week from 100 to 120. It's literally just doing like the linear regression equation and like seeing what areas was it at like in general, and then drawing a straight line. And like I don't know why like it works so well. So I
Mm-hmm.
just like wait for things to hit like to like not only touch the linear regression channel, because like here's the thing, like when it comes to like trading, I don't just look at like support and just buy at the support. I wait for something to
Mm-hmm.
hit the bottom, but then show that confirmation that it's going to start going back up. Then I'll
Mm-hmm.
buy into it. If you just buy it just because it touched the bottom, you don't know if it's just going to be breaking below that bottom. You want to
Mm-hmm.
wait for that confirmation. So that's really just my strategy, just waiting for things to hit like a low and then bouncing up for the confirmation to enter in, and then
Mm-hmm.
exiting at like a resistance.
Okay. And you're like holding on to like these shares like for like minutes or like for days. How you doing it?
It's just like for a few minutes, just like like max maybe 10 minutes, and then I
Max
get out.
2 minutes. Okay.
Yeah.
I mean, one thing I'm sure you know from being like you're a risk assessment manager or like a fraud assessment manager at a bank.
Yeah.
I mean, one thing I'm sure you know is that you want to play a game where the odds are in your favor, right? I'm pretty sure you know that. And
Yeah.
the one thing like with day trading is like 80% of you guys probably lose money, and then the ones that do make money usually are from selling courses and all that stuff. So it's a game where like the odds are always in your favor, and you're also relying, for example, like on like programs and all that stuff. And by the way, there are books in this stuff. I'm not saying what you're doing is like is incorrect or whatever, but I'm saying that's not the game I would want to pick. Is like the odds are like not in your favor, and you're not really basing it on any like the valuation of the actual company, but it's more about like I think this is gonna do this based on this formula, and that's not really based on the company. Because at the end of the day, what you are trading is just like a company, right? It's a company with real employees, real customers, real values, income, profits, everything, right? So I'm happy that it sounds like, Tommy, I'm playing this game, but I'm also investing. I'm trying to figure out the whole real estate thing. If you were just day trading, I would be very, very worried.
Yeah. But the whole thing about like 80% of the people failing, I kind of feel like that's kind of like a bad representation, because the thing is, you have to consider that with trading, it's so like there's no barriers to entry, right? For example, I just bought the first property, and I realized like with real estate, one of the reasons why like not so many people get into it is because it's you need, first of all, the proof of income for 2 years. You need there's just like a lot of barriers to enter, right? So when it comes to day trading, it's kind of one of the easiest things to enter. People see like the people selling the courses, and so they're like, okay, well, I'll just like download Robinhood or TD Reviews, and they kind of just put this money in, and they trade, and then they lose. And it's kind of like like for example, doctors, nurses, whatever career, like go through like 4 years of like kind of like this structured learning, like and then even with doctors it's actually longer. You have like the residency and stuff like that before you even cut someone open. So I feel like trading, like if there was like some type of restriction or like barrier to entry where it's like, okay, not someone who just turned 18 could just download an app and put money into it. Like if there was something like regulations, I feel like the number would be different, because I just feel like a lot of people get into it, then they lose the money, and then they leave. And they leave. So that's why I always like tell people, like, before you even start, like, do something called paper trading, and do that for as long as you need to, until you start seeing that you kind of understand what's going on, and you see your
that's a pretty good assessment. However, though, if you think about it, right, if I gave you $1,000 to trade with, and I grab $1,000 and I put it, for example, in the S&P 500, right? What do you think would have happened there? Like the entire barrier is the same thing, right? Because you just need like $1,000 on each side, right? But obviously, the people that choose that route of just passive investing most likely going to make more money than you are over the long term, right? When it comes to real estate, there is a barrier of entry, but in reality, there's a lot of people out there just fail and go bankrupt, right? But people don't really talk about that because they do it the wrong way also. I think everything has like, and the barrier of entry, I think the better statistic would be like, hey, what percentage of day traders that basically have at least like 25K, like you do, to like go through like the whole threshold or whatever, you're actually making money, right? And that would tell you more. But overall, when you're telling me, Tommy, I base my trades based on the software and this program and like this whole like formula, it's kind of like, it's gambling in a way. When you look at it like that, because it's just like software, not really based on any like the valuation of a company. Like I said, it's not the game I play, because the odds are not in your favor. Whether it's 80% or closer to 60% or 50%, I wouldn't want to play a game with my money where it's like, okay, I flip a coin, 50 I win, 50 I lose. It's not what I would want to do. But I'm happy that, again, you're a smart guy, so you're also, for example, investing into long-term investing, and you're also getting into real estate. My one advice would be careful with too much leverage, okay? Like buying a lot of houses that way with like a lot of leverage, a lot of debt, and then before you know, you have like a lot of income coming in, but something goes wrong, you don't have that anymore. If you have like a bad year in day trading, then that's messed up too. And if you quit your job while you're thinking that was going to go on forever, and then you have a massive problem.
Yeah, no, definitely. Yeah, it could all come down. That's why also I did learn a valuable lesson with investing. That's why I'm very heavy with investing. Because, remember I said in 2016 I first started with investing. Then 2018 I went more into like trading. And had I just kept the money in the stocks that I was investing in versus trading, I made money trading, right? But had I kept investing, I would have had like $1 million portfolio by now, because I had A&D when it was like I had A&D like when it was like $1. Now it's like 25,000 in A&D 5 years ago would be like over like 2 million right now. So like that's why like I use the day trading for active income, but just so I could grow like the investing, because I learned a lesson that.
Let me ask you a question.
Yeah.
When you say investment, what are you like stock picking, or are you like investing into index funds and so on, or ETFs?
Like I'll be both. I'll be like I'll like invest in like QQQ, which is like the ETF for the Nasdaq, right? Or the S like SPY. But I'll also do like individual stock picking. Like I'll do like Tesla, NEO.
So if you have, for example, 60K invested into like investment, like you say, what percentage is into like just like ETF, like index fund investing, and then percentage, for example, into like stock picking?
So like I would have to. That's why I want to create a software that could also track that. So what you call it? Like I'm sure like I think like what is it? M1 Finance might be able to track that. But I like for the investing, I just have it in Robinhood, right? So it just tells me how much I have in like ETFs. And when it comes to like ETFs, let me tell you right now. I'm literally just like 10% in ETFs. Now, the reason like I don't go too heavy in ETFs is because I do think that they provide like the stability of like the 10 to like, obviously last year was a lot of volatility. So, even SPY, S&P 500 did like, I think like 23%, something like that. But I do like I put more focus into the individual stocks just because, I was looking over the last 10 years, they always outperformed the S&P 500. But again, that's because I'm not picking like just random penny stocks either. I have like a criteria on like what I'm buying, and I try to like, I'm like kind of. Have you heard of like ARK Invest? I kind of have like the same strategy as like that hedge fund manager, where like I only like invest in like things that are very innovating. So I'm always like investing more into tech. So
And you ever heard about the tech bubble, like that happened in 2002, I think it was?
Yeah, 2001. Yeah, or
Yeah.
was it? No, 2000. It was one of those years. Yeah. I did.
The problem
but
the problem with investing based on innovation is that you're also investing like a speculator, because innovation is subjective and you're usually going to follow the herd. It sounds like now it sounds like to me that you might have, for example, you're closer to maybe like 90-10, like 90% into speculation and then 10% into more actual investments. The only concern with that is like, have you ever read the book Security Analysis by David Dodd and Benjamin Graham?
No, I haven't read that one now.
So when you're analyzing a company, are you basing it just on, I like this company, it's a good company, oh my gosh, it's growing so fast? Is that how you're picking the stock? Or are you saying like, hey, I read, and be honest, okay, it's okay. Or for example, I read the 10K form, the 10Q form, I know the income statement, the balance sheet, I know every single detail about this company, I know the competition, I know the math around it, I know the intrinsic value in case anything just does go wrong, whatever. Are you basing it like that? Or are you just, for example, saying, I like Tesla, I like NIO, I'm going to invest into it?
So, like, I don't take the fundamental, like, approach for investing just because, for example, I do think that that's a good way to look at things, but the problem with that sometimes I see is, like, we have things like Luck and Coffee, where they were, like, fudging the numbers for, like, their statements, their balance sheet. And so, I still use technical analysis, like, it's for day trading, but for investing. So I'll just buy when things, when I see that, things hit the bottom and start bouncing up. So still, like, a technical approach to it. But I do see, why, obviously why you would want to look into the fundamentals of it. See, what's the competition for this. So it's really just technical analysis and a little mixture of like, do I like what they're doing? Do I see this industry still growing?
If I told you I had a business, right, and it was for sale, and I told you everyone wants a piece of this business, would you say, okay, I want a piece of it too? Or would you say like, hey, let me see what this business earns? What would you be saying?
I would have to like what the business does and see like the potential.
Yeah, right.
So
it's the same thing with like the stock market. I think a lot of the times we get mixed up saying like, okay, this is just like a company. It's like a little ticker symbol, but it's like a real actual company behind it, right? And it's not just like, oh, like this is technical analysis. By the way you're investing, there's a term for it. It's called castle in the sky terminology. It's basically you invest in saying, for example, hey, this is going to go up because everyone else is doing it, but there's no foundation on it. It's very dangerous. I recommend you read a book. It's called A Random Walk Down Wall Street. And that book is A Random Walk Down Wall Street.
Okay, I think I've heard of that one.
Yeah. My goal is not to like have you say like, oh, you're doing such a bad. My job is to, if I can look at myself when I was like 19 and I made so much money from like picking stocks and so on, but I was doing like a very weird job at it. The point is, what you want to do when it comes to investing is have a system that works not just for like right now when the market is going up like crazy, but also works, for example, in the future. Like you said, okay, Tommy, I could have made so much money in AMD, but again, that would have been speculation because you could have also lost a ton of money. But if you said, Tommy, I could have made so much money because I saw this, the company also made this much money. Like what you want to do is build a system around facts, not build a system around I think. And also have a safety margin. So read that book. It'll be interesting, okay? And the thing is, bro, you're an entrepreneur. I can tell. So you have a lot of like spice to you. So if you have your job, you also invest into the real estate market, and you're also like you have a lot of ideas. And you have like a YouTube channel. Eventually, you'll be like very successful. So when that money comes along, what I don't want is for you to like have this money in weird places. And when things go, and by the way, I read this like newspaper. It was like from the 1900s, and it was basically like the top 50 companies back then. And none of those companies exist today. So what I'm saying is, a lot of the companies you see today saying like, oh, Tesla's a short thing, this is a short thing, this is a short thing. in 50 years from now, like when you're like you're 28 now, when you're like 78 or whatever, you'll still need money then, you know. And if your portfolio goes down to zero, or like you lose a ton of money and you have no money for retirement, it's gonna be a problem.
Got you.
That's my advice there. So read that book, bro. I think it'll help you out a lot more than I can in just like 46 minutes of us talking. Okay.
Got you. Yeah. Oh yeah. Let me see that. Yeah, we are.
Yeah. I appreciate this conversation, Justin. I had a lot of fun with this conversation. Okay, you're a great guy.
You too, man. Cool. Well, probably like when I blow up a little bit more on YouTube, we could probably collab or something. You know?
We just did, bro. We just did.
Hey, man.
All right, bro. Have fun, man. Great conversation. Have fun, and just like just do the research on that. Okay. Be careful with the game you're playing.
Yeah, of course. I'll look into that. Thank you, man.
All right. Peace out.
Peace.
All right, guys. So that right there was Justin, a day trader and an avid leverager, you know. And the game I play, guys, is never to look at someone and be like, oh, you're doing a terrible job, Justin. I don't like you. I don't think that, you know. It's all about strategy and all about what you're trying to do. Justin is only 25 years old, like 1 year older than I am, okay? And he's doing a lot of big things, you know, like, oh, I'm day trading, Tommy. I'm also picking stocks. I'm doing this stuff. But in reality, picking stocks and day trading, they're not part-time jobs. They're literally full-time jobs, right? To analyze a company from its fundamental level, it takes a long time. And that's the only way to analyze a company. When you basically invest with the castle in the sky theory, where I think, hey, this company is going to do so good because I believe in it or whatever it is, or innovation, the idea is that it's going to be very, very difficult to get ahead, especially when you're investing for 10, 20, 30 years. And the idea is, okay, I made some money this year, but what about the next 10 years and the next 20 years and the next 30 years? That's the whole idea. And by the way, there's a bias. It's called confirmation bias that people actually have, where they find information that confirms whatever they're into. So like he said, Tommy, yeah, but you know, day trading is not that risky. In reality, you have a low entry of entration, whatever it is, right? But yeah, that's true. But you also have a low entry when it comes to just basically investing into a good portfolio that lasts a very long time. So long as you're there. When it comes to real estate, the entry level is not really that high. You have a good income like the average American does have. You put down 3.5% like the average person does do. But does that mean that's the best way to do it? The answer is no, obviously not, okay? My only advice would be this, okay? I would not day trade. I would not pick stocks unless I know from a fundamental level what I'm doing and I understand it. My advice would be, hey, if I bought this property at age 25 for 154, let me focus on using my income and also building my YouTube to actually learn a lot more and teach more people and make more money. Great. Use that income to pay off this property, build a solid emergency fund, and also consider having another side hustle to actually pay off this property even faster. That's the overall goal here. And also investing in your retirement, for example, maxing out the Roth IRA. If you're gonna get, for example, an SEP, or for example, if you wanna get maybe like, you know, like have like your own LLC, hire yourself as an employee, and basically do that for retirement also, a possibility. But the point is, you gotta invest in retirement the right way. He went from being like a 90-10 like I do, basically being a 10-90, where basically you put 10% into short things and then 90% to speculation, because speculation right now is working. And that's what I am so scared of, okay? Does that make sense, guys, okay? I had a great conversation, awesome conversation, but overall, that is my opinion, that is my advice, and that's why I will not play this game. No day trading for me, no picking stocks unless I know what I'm doing. On top of I'm just like basically investing into my retirement. When I buy real estate, I buy it the right way, and I'll keep making more and more money until then. That's the core idea. But I don't play games with coin flips. I flip the coin, I make money once, I lose everything the next time. I don't want to play a game where me losing means me starting at go again in Monopoly. That's not the game I want to play. Very, very dangerous stuff. But I'm happy I had this conversation to see exactly the psychology of a day trader. I'll see you guys next time. Thanks for watching. And by the way, follows Justin's channel. He said it in the video, so check that channel out. And as always, guys, like this video. On top of that, also subscribe, hit the bell, get notified. And if you guys want to talk to me one-on-one, join my Patreon link down below, or send me a DM on Instagram at Tommy Bryson. Before I go, if you watch another video, guys, here's another video right here, and click my face right here. See you guys tomorrow, and as always, peace.